I'm Charlotte McLeod with the Investing News Network, and here today with me is Will Rhind, CEO of GraniteShares. Thank you so much for being here once again online with me.
Thank you, Charlotte. Thanks for having me on again. Pleasure.
Of course, excited to talk about gold today. The last time we got a chance to talk was actually just before the US election. And of course, we've seen a lot happen since then. At the time, I remember you saying that it wouldn't matter if we got a Biden victory or a Trump victory, those were both going to be bullish for gold. Despite all this talk of stimulus efforts from Biden, we have gold under 1900 per ounce right now. So why do you think that is?
Well, I think the main reason is probably twofold. One, it's exactly what you were just talking about. It's the stimulus, but more specifically, gold rallied up to $1,950 roughly, on the back of the election results and the promise or the hope of more stimulus, but actually happened as of yet. That's not to say that it won't happen. Of course, the market expects there to be more stimulus, but obviously as of right now, that hasn't exactly happened. So gold's pulled back a little bit from then. I think the other reason is that we've had this environment very much of risk on, where it seems like certainly since the beginning of this year, it's been an environment for sort of extreme risk taking, on the equity side, with all sorts of stories of retail investors and short squeezes and different stocks. And so I think from that perspective, gold has kind of taken a bit of a backseat with this sort of fever around stock market investing.
Okay, so looking forward then into 2021, what do you think gold's path looks like? Do you think we're looking at a higher gold price later on in the year? And what drivers could we see there?
Well, I think that the good news for gold investors is that we have had obviously the peak last year. Gold price did go under $1,800, albeit quite briefly, and did find some resistance there, I think good amount of resistance. And so although the price isn't back at an all-time high, like the equity market, I think that there's still a good cause to be positive about gold for this year. In other words, outside of equities, where do investors go for any kind of hedge or any kind of investment that has a low or negative correlation to the market? And I think the actions of the central bank, particularly the Federal Reserve, but other central banks of the world have incentivized people to buy equities. We know that. But the question is, what else do you buy? And I think from that perspective, gold is still very attractive as a hedge.
Okay, and I do think it's important to also look at the flip side scenario. So, if we don't get a higher gold price this year, although certainly it seems like the environment should be supportive, what would that look like? What could be downside risk factors for gold?
Well, I think the two main ones, and they're obviously interlinked, but we have an environment where we have zero interest rates, or as close to zero as we can. And if those real rates, that is, the nominal interest rate minus inflation, start to increase, then obviously that makes gold, all things being equal, less attractive. So a rise and as well a rise in the US dollar sort of concurrently would be an environment that's not good for gold. Now, obviously, the reason why I think that the outlook for gold is positive, and many other commentators think so as well, is because we don't expect those two things to happen. And we believe that interest rates are going to stay low for longer. Actually, interest rates on a real basis will continue to move down over time because of inflation rising. And obviously that will affect or manifest itself in a weaker dollar.
Okay, well, thank you for that. I want to take a moment to ask you about gold ETF inflows and outflows and what we saw there last year. From my understanding, in the earlier middle part of 2020, inflows were very strong and that reversed at the end of the year. Can you explain those market dynamics, maybe touch on who was buying or not buying, what was going on there?
Yeah, I think there are sort of two types of investors. And again, it's always dangerous to kind of completely generalize. But I think from my perspective, having done this as long as I have, categorize it as being strategic and tactical money. And so from a strategic perspective, you have had a steady increase in holdings of gold ETFs since the bottom of 2015, the beginning of 2016. So when the gold price kind of bottomed out, you've had a slow accumulation over the last few years, which only accelerated obviously last year. So strategically, people have been oriented to put money into gold. That has been a trend that's happening for a number of years. I think what we saw last year was just an accelerant on top of that, and that was the much more tactical money. So momentum-based investors obviously responding to the rapid move in the gold price upwards. And so we had a lot of money, perhaps more hotter money coming into the market, chasing returns as the gold price went towards $2,000 an ounce. And so, that money, some of that money reversed obviously when the gold price came down, but certainly from our perspective, and managing our gold ETF at GraniteShares, we didn't really see much by way of redemptions when the gold price came down the latter half of the year. So I think from that perspective, it shows you that the strategic money is still very much in the gold trade. But yeah, a lot of momentum investors that got in towards the early to the middle part of the year probably came out.
Right. And what could inflows, outflows for gold ETFs look like as we head into the new year?
Similar pattern. I mean, considering I guess it depends on what the price does, and particularly in the shorter term, it's really about the momentum-based investors or the more tactical money. From a strategic perspective, I expect that people will continue to allocate to gold as they need an alternative, a credible alternative to equities and bonds. So I think that's a longer term trend while we have an environment of low to negative real interest rates and a lower or weaker US dollar platform. But outside of that, I think, if you get the gold price moving up again over $2,000 an ounce, clearly you'll get more investors coming in, certainly more of the machine-based traders and things in the market responding to that momentum, and there'll be a lot of buying activity, I would expect, on the back of that.
Okay, now as we talk about investor interest in gold, I want to take a moment to discuss gold and Bitcoin. With Bitcoin's price increase at the end of this year, I started hearing more and more about the gold versus Bitcoin debate, which seemed to have gone a little bit dormant in the recent past. So I want to ask you about Bitcoin and gold. Do you see them as comparable assets, and why or why not? How are you looking at that?
I very much do. I've always viewed Bitcoin as an asset that people value because of its lack of correlation to the stock market or the bond market. Again, from that perspective, it is very similar to gold. It is very similar to any other investment that is not correlated to the moves of the market. So again, when we sort of frame the argument in terms of, people have to be or incentivized to be in the stock market, we understand that. The question is, what else are they doing? What are they doing to hedge themselves? What are they doing to lower that risk in the portfolio? And from a pure correlation perspective, people are looking for investments that have a low correlation, and Bitcoin fits into that, along with gold.
So it sounds like, would you say they can both be part of somebody's portfolio? Because as we had this interest in Bitcoin increasing, I started to hear more about gold investors selling their gold, moving into Bitcoin. It sounds like maybe you think that doesn't have to happen.
Well, I don't think that it's sort of one or the other. I think that there are plenty of investors who like gold and who also like Bitcoin for the reasons I just laid out, which is that it offers a genuine alternative to stocks and bonds. There will be some people that will prefer one or the other, but I think assuming that people are comfortable with the custody side of Bitcoin, I don't see why people wouldn't hold or at least be interested in holding both.
Very balanced. I also want to ask about the precious metals aside from gold. Is there any place that you're seeing opportunity in the year to come? I do remember, I think maybe partway through last year, you were mentioning platinum as one to potentially watch. How do you feel now?
Yeah, I think platinum obviously has increased over the last year, and has done well from a performance perspective. But I still think that it is potentially undervalued still versus gold and some of the other metals on a historic basis. And I think from that perspective, when you look at the precious metals complex, silver is more tied to gold, Palladium, there are different reasons why the palladium price is so high, but I would think that the upside potential for palladium is more limited. And really, the story about platinum is a lot more, and Joe Biden or the Biden administration at one level has kind of been an accelerant for this, but there's now a much more serious hydrogen economy. And hydrogen as an alternative generator for electricity, an alternative to, say, battery vehicles and just batteries more broadly, as an alternative energy source, it needs platinum in terms of the catalyst and the procedure to change it into electricity. So from that perspective, I think platinum is a metal that very much has a future as part of the green economy. That is something that now is starting to be a lot more serious rather than just the kind of debate over clean fuel being dominated by the battery sort of lobby, if you will. So I think hydrogen now is going to be a serious thing. There will be hydrogen fuel cell vehicles that will become a part of the market, just like electrical battery driven cars at the moment, and platinum is a part of that future.
Any thoughts on silver? I know we have a lot of viewers who are interested in silver, and last year, although we saw some price momentum, it does remain quite well off its all-time high, unlike gold.
Yeah, I think again, silver is just so closely linked to gold in the sense that if gold goes on a run, all things being equal, silver price should do the same thing, especially in an environment where if the consensus is that the global economy is starting to recover from the pandemic, silver will do well. But its fortunes to me are very much tied to gold, and gold will always lead that conversation. So if gold's doing well, I think silver can do well also. But that's very much the pairing.
All right, well, those are my questions for you. As we wrap up, are there any thoughts that you would leave the audience with as we head into the new year? Something that occurs to me just now, you mentioning this global recovery. Where do you see that going? Are we on that path this year, do you think?
Yeah, yes, I do think so, Charlotte. And I think, probably to wrap up, we talked about gold and we've talked about silver, we've talked about platinum. We've largely talked about those as alternatives to stocks and bonds. And I do think, it's a very valid conversation for anybody that's looking for an investment that has a low correlation to the market. We've also got to remember what's going on. And what's going on is there's been a huge amount of stimulus put into the market. This is very much an environment where the Fed, other central banks are trying to encourage inflation in the economy and obviously adopting policies to enable that. And so from that perspective, it's the most positive inflationary outlook we've had for a number of years. We have commodity prices across the board kind of increasing on the back of that. And I think in this environment, people are now starting to think about inflation in a way that they haven't done for a number of years. And when you think about inflation protection, clearly gold and other metals have a role to play in that. But broad commodities and commodity investing more broadly is something that investors are starting to think about for, I think, this time or the first time in a number of years. And certainly at GraniteShares, we've had more conversations about broad commodities, I'd say, in the last few months than we have in the last few years. And so I think that gives you an idea as to how worried, how concerned people are about the prospect of inflation, but also how they're trying to act on it now and do something about it in the portfolio. And historically, certainly commodities such as oil and energy more broadly have had high or positive correlations to inflation in the past. And that's one of the main reasons why commodities are often thought of as an inflation hedge. But I think I just leave people with that thought, that this is the most positive outlook for inflation we've had in a number of years. And so anybody looking to hedge that in a portfolio, broad commodities is certainly a way to do that.
Okay, well, thank you so much. I think that is a good, solid place to leave this on for today. Great to have you on.
Thank you, Charlotte. Pleasure as always.
Of course, and I'm sure we'll catch up in another few months. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Will Rhind with GraniteShares.